Framework for financial reporting. Conceptual framework for financial reporting have four things. The first one is conceptual framework, the second one is quantitative characteristic, and the third one is definition, recognition, and measurement of the element, and the last one is concept of capital and capital maintenance. Purpose of conceptual framework for financial reporting is to assist the MASE in the development of future and to assist preparers for financial statement, to assist auditor, to assist user for financial statement in interpreting, and to provide those who are interested in the work. Type of objective have two types. The first one is general purpose financial reporting, and the second one is usefulness and limitation of general purpose financial reporting. General purpose financial reporting forms the foundation of the conceptual framework, and usefulness and limitation of general purpose financial reporting useful to existing and potential investors, lenders, and other creditors to making decisions about providing resources to the entity. Fundamental qualitative have two characteristics. The first one is relevance and the second one is faithful representation. Relevance capable of making a difference. Predictive value, confirmatory value, or both. Predictive value is to predict future outcome, and the confirmatory value is it provides feedback about previous evolution. And the second is materiality. Materiality is material if omitting it or misstating it could influence decisions. Faithful representation have three. One is complete, neutral, and free from error. Complete is including all necessary descriptions and explanation, and neutral is without bias, fair, not where, emphasize, de-emphasize, and otherwise manipulate. And the last one, free from error, is no error or omissions. Enhancing quality have four characteristics. The first one is comparability. Comparability is identify and understand similarities in and difference among items. And the second one is verifiability. Verifiability is different, knowledgeable, and independent observer. And the third one is timeliness. Timeliness is although the information is the less useful it is. And the last one is understandability. Underlying assumption, going concern. Going concern is the assumption that an entity is a going concern and will continue in operation for the foreseeable future. Element of financial statement has financial position, assets, liability, equity, performance, income, expense, capital maintenance, adjustment. And financial position have three things. The first one is asset, liability, and equity. Measurement basis has two bases. The first one is historic cost measurement basis, and the second one is current value measurement basis. Historic cost measurement basis is derived from the historical price of the transaction or event, and the current value measurement basis is provide mandatory information about elements using information update to reflect conditions at the measurement date.